Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. There is a lot going on for the dollar, be it the US exceptionalism or President elect Trump's statement, which is keeping the dollar elevated. Of course, emerging markets have taken the toll as currencies weaken to possibly adjust for any tariffs. Chinese yuan is at a crucial 7.30 mark, and just for context, at the end of September, yuan was trading at 7 against the US dollar. Rupee was at all time lows, comfortably breaking 84.50 and moving towards 84.70 yesterday. Good morning, JK. Persistent dollar strength seems to be continuing. Yesterday's strong data from the US may have supported this narrative. What's your take?
Good morning, Swaraj. I think dollar is strong. There's several things going on for the dollar's strength. And what is notable for me is the momentum that has picked up in the USD INR also this week. We have weakened 0.25% yesterday compared to the lows, or rather the closing that we saw on Friday. And of course, the GDP data has given a further push up to the dollar against INR. Although yesterday's FI numbers were very insignificant, not much, and even the stock markets had been positive in the local market. So it's more of a sentiment and some amount of enhanced importer covering that's happening after the break of 84.50. So I think this trend is still quite strong. Only the pace is being determined by RBI. Yesterday they were not seen much, so we have seen the large move, but they might come in at 84.80 plus, and but let's reiterate that trend is still up for the USD INR, so long as the dollar index is also not seeing any reversal. We will not be able to see any quick reversal in the US dollar against INR as well. Also yesterday, HSBC India manufacturing PMI also came lower than initial estimate at 56.5 versus 57.3. Now, global currencies, yes, as you said, it's been a dollar rally all through right after September, and got momentum after Trump's election as president. Now, yesterday, of course, there are more evidences of outperforming US economy versus other major countries, helping dollar index gain nearly 1% from its Friday close. Now, the final reading on German and French manufacturing PMI came lower than initially estimated. On the other hand, US ISM manufacturing report showed a higher number at 48.4, although it is still in contraction territory. But if you look at the details, employment net index was higher. New orders were also quite strong. And the good news was that the prices paid index was lower. So which means that, we have a non-inflationary expansion growth in the manufacturing in US. So we are repeatedly being reminded about the US exceptionalism that is keeping the dollar quite elevated. Of course, also the market has at the back of its mind, anytime anything to be said by Trump, more on tariff and other geopolitics, which will again be on the supporting side for the dollar. Yesterday, we also had quite a few Fed members speaking about the policy. Mr. Waller, one of the noted Fed speakers, said that he would be supporting cut in rate on December 17-18 meeting, although the monetary policy remained restrictive. Of course, he would like to watch upcoming data. On the other hand, Mr. Bostic said he has an open mind, and he wanted to see more data on jobs this week before shaping a decision. John Williams, who is another influential member, is saying that the direction is towards a lower rate over a period, but right now we needed a restrictive rate. So a lot of host of Fed members speaking ahead of the the blackout period that will come into play next week of ahead of the Fed meeting. In the meantime, we are seeing that the rate cut probability for December by the Fed is now at 79% versus 66% previously. Now, I mean, the market consensus is for a rate cut in December, but there is a lot of sizing down of rate cuts that's happening for the coming year as well. Now, dollar was not only supported by the rate scenario as well as the economy, but also the political crisis in France, where the Prime Minister, Mr. Michael Barnier, has invoked, extra provision in the constitution to force through the controversial budget without parliamentary approval. That escalates the political tensions and all but generates a no confidence vote in the coming days. This did lead to a fresh sell-off in the French bonds, and there is an indication of whether the market is under stress. That is the yield difference between French and the German bonds is as high as 7 basis points, which is the highest that we have seen since the Eurozone debt crisis. So that's actually a clear indication that the Eurozone bond market is also under stress, and Europe itself is facing several headwinds apart from the economic slowdown also. So if the government does collapse, that will be making the first such an event in 1962 and may actually lead to a caretaker government to be appointed by Emmanuel Macron. Now, extent of the negativism on Eurozone is measured by also the fact that French bond and the stock market were under severe stress yesterday. So this is something that we need to watch, because the euro's fall against the dollar is eventually determining the dollar index. But as you mentioned, today we have also seen a breakout, or rather break up, in the Chinese yuan against the dollar. And this has happened after the Chinese central bank fixed the yuan at much higher rate, much closer to 7.20, and they were much lower yesterday, and possibly indicating they are okay with some more weakness. And of course, this is also following the overall dollar strength. And there were yesterday indications that US was putting more restrictions on the technology exports to Chinese companies. So there are several headwinds various economies are facing, and that actually is leading to a dollar strength, which is not likely to reverse in a hurry at all. We have now a host of data, starting with today, the JOLTS data, which will give an indication of the number of jobs that is available in new jobs that is created in the US, and there is an expectation that the job market is again showing higher job openings this month at 7.45 million. And of course, we'll have to see the details of the job quits and also the retrenchments. So there is a mixed feeling as far as the job market is concerned. But definitely, we don't have other areas of the economy which is showing any sort of weakness. We'll have also the ADP job numbers tomorrow, followed by weekly jobless claims, and the final the non-farm payroll report, which is very crucial. Just coming ahead of the Fed meeting in this month, and this time the non-farm payroll is expected to show an increase of 1,95,000 versus 12,000 that was seen last time. And unemployment rate is as of now forecast to come higher at 4.2%. Again, mixed sort of feeling. The earnings are also showing a decline as per the forecast. So this number is going to be probably a big determinant for whether the dollar will continue its rally, or will see some sort of a consolidation or correction as we head into the year-end market as well. So that's very crucial. And so overall, we are also headed into a period of central bank meetings. This week we have the RBI meeting, where we are looking closely at how they project the GDP and inflation in the coming quarters. And also the Japanese central bank meeting just after the Fed meeting. Then we also have the ECB meeting this month, where debate is between 0.5%, 1/4% cut. So December is, at least the first 3 weeks of December, is going to be very data packed and event led. Market could quiet down after that, because then we will be just left with a few more weeks before the new administration takes over in the US. So all in all, the next few weeks are going to be volatile. Thank you.
Thank you, JK. And the general theme which I get is that more evidence of US outperforming its peers. While Europe is struggling with its own political turmoils and a weak economy, US data was quite upbeat as shown by the ISM data. Markets are also pretty cautious on President-elect Trump's potential statements. Now, where do the rate cut probability stand for December? It's now at 79%, but there is adjustments that's happening on the probabilities for next year. On the European front, French bonds are experiencing a sell-off as there may be a possible no confidence motion in place. Spreads between French and German bonds have been rising. Now it's somewhere around 7 basis points. Um, it's not just the euro, but also the yuan, which is facing a fresh round of weakness, breaking the 7.30 mark. Potential restrictions to technology exports to China may be keeping the yuan weaker. For rupee, we have weakened to 84.70, backed by weaker GDP numbers. It seems to be more of a sentiment-driven move, considering FI numbers were very small yesterday. Dollar index remains strong until the time there's no reversal over there. It would keep the rupee weaker. And of course, on the upcoming data, we have the JOLTS data, which is the job availables in the economy, which is going to be released today. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.